Good morning, everyone. So welcome from Carrick Property. I just thought I'd go and sort of exciting to announce that we've got phase 2 of the triangle, and which is a investment product that we've been working with One Global. And today we've got George Radford, who's the MD for Africa of One Global Property Services. Welcome, George.
Hi, Scott.
Okay, so it's just what we're going to do very briefly for you today is obviously just give you a rundown with reference to what One Global overview, which is a strategic exclusive partnership that we have with them, and it's again looking at the UK Ashford new investment perspective in terms of as a new destination in the southeast of the UK, and we'll look specifically at the Ashford property market as well. And then we'll go into some of the key facts with reference to the development, where we'll talk about pricing, gearing, leveraging, etc. The units that are available, and from that perspective, you'll then be able to ask a few questions if you've got any around the development or the investment case and the infrastructure within Ashford. And then just briefly from our side, obviously, from Carrick Property, the reason that we get into strategic partnerships is to provide our clients with the best opportunities within these kind of high growth markets, but understanding you want to diversify your portfolio and then look at where the opportunities lie with reference to the capital appreciation, etc. So without further ado, I'm going to let George kick off. You're welcome to ask any questions along the way. I'll pick them up, and we'd love to be as engaging as possible. And welcome to all of you from wherever you are dialing in from, and please pose any questions as we go. Thanks very much. Over to you, George.
Brilliant. Thank you very much, Scott, and big welcome to everyone wherever you may be across the beautiful continent of Africa, and thank you for attending, and thank you again, Scott, for you and the Carrick team for putting this together and inviting me along today. As Scott mentioned, my name is George Radford. I'm the Managing Director of One Global Property Services for Africa. So let's have a quick look at what we specialise in doing. So ultimately, what we do is we work with individual clients around the world. My remit is very much in Africa, and we work with individual clients and help them to invest in direct residential buy-to-let property. And we do so in a way that is designed to ensure that when clients invest in direct residential property, it's done safely, efficiently, and effectively in a manner that is designed to optimize the return on investment, because ultimately these are investment properties. We've got a global footprint. We've got a big presence in Asia, the Middle East, Africa, and also in the United Kingdom. So we're very well spread in terms of resources. So just to go into it in a bit more detail then in terms of what we do. So from a services perspective, right at the front end, we do all the research and due diligence on the property market, and also on the developers themselves, to ensure that when we bring something to market, it is in a very, very fast and strong growth market, property market, and also the developers that we're working with are best in market, that they've got planning permission, they've got development financing, they deliver a quality product to ensure that our clients' interests are protected. And then from a sourcing perspective, again, we really pride ourselves on working with the best developers in market, and I'll elaborate on that a bit further on in the presentation. So on the investment advisory side, this is very much sitting down with clients, Scott, you and your team sitting down with ourselves and the client, and understanding the client's investment needs and their investment requirements, and aligning that with the most suitable product to meet their investment horizons. And then once we secured that investment, we will appoint the solicitors. So we facilitate the conveyancing process, and we work with the best solicitors in market who ensure clients' interests are protected. They provide a good service and also offer them good value. From a mortgage financing perspective, we work with a network of mortgage brokers, but also directly with a number of banks the lenders, to ensure clients have whole of market access to mortgage products if they are looking to leverage their property purchase. And then at the back end, we've got an in-house lettings and management company, which is really important because it enables us to manage our clients' portfolios directly and to ensure it's done properly. And then when clients wish to exit, maybe 5-10 years down the line, we also provide a resale service, which is obviously designed to optimize the return on equity. So hopefully that adds some colour to what we do. I mentioned we pride ourselves on working with the best developers in market, and a lot of the developers on here are FTSE 100 companies or the biggest and very well-renowned developers in the UK property market. So please have a look at that when we share the slides. So let's have a look at Ashford then. So Ashford is located in the county of Kent in the southeast of England, often referred to as the Garden of England. And there's a number of reasons why we really like the Ashford property market. Firstly, it's in the southeast, which is the beating heart of the UK economy, really, obviously with the proximity to London. But Ashford as a town is absolutely booming. You've got a population growth over the last 15 years of almost 25%. Which is extraordinary. Property prices have increased by 29% over the last 5 years. The value proposition in Ashford is far greater than London, almost 40% cheaper to buy a property in Ashford, yet you can still get into London in 29 minutes. And we're going to really focus a bit on connectivity today because that's one of the key drivers for the Ashford economy, but also for the Ashford property market. There's huge job creation, 10,000 jobs created in the last 5 years. Obviously, those people need places to live, which is great for the property market. And there's a new film studio coming, which I'll elaborate on in the presentation. So connectivity, crucial in any property purchase, making sure where that property is located has access to good transport links. It doesn't really get much better than Ashford. It is the only place outside of London in the United Kingdom that has access to the Eurostar on the doorstep. So 10-minute walk from the property, you can get to Ashford International train station, which you can get to London in 29 minutes, but probably a bit more exciting, you can get to Paris in an hour and 52 minutes. So you've got direct access on your doorstep to Europe, which is very, very unique, and there's no place, as I mentioned, outside of London that has that. Just to come back to elaborate a bit more, the Ashford International train station is a 10-minute walk from the property. I'll show you on a map a bit later in the presentation how it all fits together in relation to the development. And you can see here in terms of connectivity time, London King's Cross. So you go into London King's Cross and then you can access Crossrail, and in the future that's where HS2 will go from as well. So the connectivity really is second to none. And then you've got airport access on your doorstep, 1 hour to Gatwick, which is the second biggest airport in the United Kingdom, and then the Port of Dover as well, which is 32 minutes. May not seem so significant, but ultimately this is driving the Ashford economy because of the proximity both to London, but also to Dover and the motorway network that surrounds it as well. So it's become a real key distribution hub in the United Kingdom now, Ashford. Obviously, the cost of employees is much less than London as well, so that's great for businesses looking to locate in the town of Ashford. Quite excited to get onto the property information, so I won't dwell too much on all of this. There is a very good college in Ashford, so it's been rated as outstanding by Ofsted, which is a great accolade for the town. So the designer outlet, I'll come on to that in a bit more detail in a second, but it's a massive attraction to the town of Ashford. And Elwick Place, this is the shopping and leisure centre, which just sits a 4-minute walk away from the development. And again, I'll show you on a map how that all fits in terms of proximity to the triangle, the project that we're launching today. So I mentioned I come back onto the designer outlet. So this attracts 3 million people a year to the town of Ashford. That's not an insignificant amount of people. So that's really, really good for the local economy. It drives a lot of growth. There's obviously a lot of spending, and that is fantastic for the overall strength of the local economy. So they just expanded it as well, further £90 million spent on expanding it. So you can go here, people drive from all over the UK, believe it or not, to buy designer clothes. And they've also got a host of restaurants and other amenities there, which serve the domestic market as well. It's turning into quite a sort of a wine and brewery hub as well, Ashford and the county of Kent. There's more vineyards in Kent, actually. It's not Cape Town, of course. I would never try and pretend that. But, you know, the wine market is growing rapidly in England, and Kent is really at the heart of that. This is massive in terms of an accolade for the town. Amazon and Netflix have now got planning permission for a £250 million film studio, which is incredible. And why are they located in Ashford? Because of connectivity, because of cost of employment, and so on and so forth. And it's a great place to be.
I mean, George, just from our side, I think what would be interesting to chat about a little bit later, especially when we're talking about the actual investment case, is that based on the connectivity, based on what we've been talking about earlier, is how this impacts the rental market. For the ability and the demand that sits within renting properties that we putting positioning. If you're not going to live in it and obviously rent it out, then it speaks to this as well.
Yeah, exactly, and that's why we like to look at this fairly intricate in detail on the market, because if the economy's not growing and there's not job creation, then where are your tenants and where are your buyers when you want to sell the asset? So yeah. Absolutely, Scott, that's it's crucially important to understand the economy and what's driving it, and is that going to continue, and if so, that's great. So if we look at the last 5 years performance of the Ashford property market, we've seen growth of 29%, compare that to London of 9%. So it's triple the growth achieved in London, to put it in perspective. And the value proposition is, as I mentioned earlier, it's almost 40% cheaper than the average London property. So you're getting much better value, you're getting better yield, and you're getting better growth. So many would argue that it makes more sense to be buying in a town like Ashford than it does in London.
And in terms of the UK property market, we've obviously compared certain towns there directly. From an average perspective, what are we looking at there, over the last 5 years?
Yeah, it's outperformed. It's quite a difficult question to answer, Scott, really, and it'd be misleading to chuck figures out there, because if you look at what's happened in the last 12 months, it's been extraordinary in the United Kingdom. You've had growth anywhere from 10, 15 up to 20% in some locations. So despite COVID and the headwinds that's created for the global economy, we are seeing a property boom. I mean, the market's hotter now in the UK than it has been for the last 20 years. And that is super, super encouraging. Why is that happening? Because people are sitting on money that they want to invest. They want stability. They want fixed assets. Planning applications were a lot of them were cancelled or put on hold during COVID. A lot of the labour force with Brexit have not returned to the UK. Cost of building materials has gone up astronomically, and that's created a perfect storm, really, massive demand. And this is domestic demand. The international market has not really returned to the volumes that it used to be, but that is happening slowly but surely. So you've got significant demand and very, very low supply, and the cost of materials and land increasing significantly, which is driving up property values. So I don't see any change in the short term, really.
Okay, that's good to know.
Yeah, thank you for the question. So you can see here, I mean, this is forecasted growth for the southeast, where Kent and Ashford sit. We're looking at 17% quite conservatively over the next 5 years. I expect it to massively outperform that, but we know we do need to draw on certain data and certain statistics. This is from Savills, who are one of the market leaders in terms of data. So I just wanted to show that to give some form of indication. This is really interesting. Well, I find it interesting. This shows the changes in requirements when one is looking for a property to live in. So just to highlight, I know it's not particularly clear, but the dots are pre-COVID and the blue bars are now.
Current.
And these are a list of priorities when you are searching for a property. So if we have a look at this here, the first one, that dot is pre-COVID. That shows the priority of being close to a park, green space, having open space in your property.
So that's a very big lifestyle choice.
That is now. So that priority has doubled in terms of people's requirements. It is seriously significant because we need to be mindful of that when we're bringing properties to market, because otherwise we're going to get the tenant market wrong and the liquidity will be impacted as well. So what this shows us is that people are looking for properties with some outdoor space close to green parks. Why? Because they're working from home more and they're spending more time in their home. If you compare that to transport, this used to be the most important pre-COVID and now, because people are working from home. And then this one here is probably the other one to point out. This is proximity to the place of work. Used to be really important, now less important. So I find that fascinating. And you would never have seen a bigger shift in such a short period of time in that. So it's quite astounding.
Yeah, I mean, that talks to, obviously, from a demand perspective, in lifestyle, being close to the parks, etc. Obviously, what's interesting there is there's still retails remain pretty on point. So, in place of the triangle in its position, that's a convenience factor. It ticks right a few boxes right off the bat, where you've got, the park, you've got the retail, you've got the connectivity, even though that has reduced according to your slide. It does present itself easily for them to get into Europe, etc. So it does tick a lot of boxes in terms of the investment case of what the trends are showing, certainly.
Yeah, absolutely. So here we are, the triangle, suitably named, it's shaped as a triangle. And we are today focusing on Block B, the phase 2 launch of Block B. And I'll elaborate on that shortly. Just want to highlight some key figures, so the salient points around the development. So we are working with Crescent Homes again. Delighted to be working with them, real market leader in terms of being an SME developer in the UK, and also in partnership with Homes England, essentially part of the UK Ministry of Housing, and LendInvest. These are the two key funders, Homes England and LendInvest, behind this development. It's a £90 million gross development value, and those are the two key funders for this scheme. Why is that important? For security, ultimately. You've got big institutions funding this development, and it has to come out of the ground, and it is coming out of the ground. And we're really proud to be working with these parties because it's great for our clients. It means we're going to get great products to be delivered. And it gives security, exactly. The leasehold here is a virtual freehold. It's 999 years. The completion is in Q1 of 2023. So we're looking about sort of 18, 21 months away. We're focusing on Block B today, which is 32 units, mixture of studio 1 and 2 bed units. There's no ground rent. Ground rent, for those who may not be so familiar with the UK property market, you pay a ground rent on a long leasehold property, typically 250, maybe £500 a year to the freeholder. This developer, again, has been very pioneering, Crescent Homes, in abolishing the ground rent on this project. Great for your yield, also good for mortgages, because banks don't really like ground rents anymore. 10-year building warranty. We're looking at yields of up to sort of 5.8%, which is good for the southeast of England. And the 2 beds come with parking, which again is a fantastic attribute and facet to have with a 2-bed unit for renting and also for selling. The purchase process, just to touch upon that. So you're looking at an initial reservation fee of £2,000, and then you pay a 20% deposit on the exchange of the contract. And then on completion, the balance of 80% is due. So let's say you take a 60% mortgage, then you're paying 20% deposit here, and then in a year, you know, in Q1 2023 on completion, 18 months, 21 months from now, you would pay another 20% plus your costs, and then the mortgage will cover the 60%. I will elaborate on numbers a bit more as the presentation goes on. And we'll revisit this slide at the end, Scott, in case there's further questions that you or any of the attendees have.
Okay, great. So I mean, I think the important thing is just to notice is the starting price within that space is the studios are at 180,000, going up to starting of 260,000 for the 2 beds. And I think the important there is just looking at the leverage aspect and components of what's doable.
Yeah, absolutely. I'll come on to that. So here we've got Block B. The town centre is up here, this direction. As you go here, cross over the bridge, and then you get to Elwick Place. I'll show you on a map in a second. And then this is the park. So as you'll see in the later.
Sorry, George, so Block B has got views overlooking the courtyard and then obviously in some aspects of the park as well.
Yes, exactly. So really, really like beautiful location really for new build development. Let me just show you that in a bit more detail, Scott. So this is Block B. It changes slightly from floor to floor, but to give you an idea, this would be your typical 1 bed. In South African terms, let's say sort of approximately 50 square meters, there or thereabouts. And then your 2 beds here, you're looking around sort of more 70 square meters, there or thereabouts, maybe a smidge more. So 2 bed, 2 bath, 1 bed, 1 bath. All units have outdoor space. So they all have balconies, really important. So we've got that box ticked. And then also you've got the park on your doorstep. So again, another box ticked for tenants, home working, very high spec development. So perfect for home working in that regard. Let me just talk you over some numbers. So this 1 bed here, to give you an idea, is £210,000. It's the purchase price. So I mentioned earlier, there'll be an initial £2,000 reservation fee. You would then be looking to pay a 20% deposit plus your legal fees, which would equate to £42,000. So 42,000 plus your 2,000 makes 44,000. That is what you are in for over the next 4 weeks on the exchange of the contract to secure that type of unit. You then don't do anything for another 18, 21 months, as I mentioned. And then on completion, you would pay a further 20% based on a 60% mortgage. So on that scenario, your 20% deposit on completion, plus your completion cost, your transfer tax and so on and so forth, would equate to £62,000 payable in a year and a half, 2 years from now. Okay, so you got 42,000 on the exchange in the next 4 weeks. On completion, you're paying 62,000, which would equate to a total equity requirement of £106,000 spread over the next 2 years to secure a 1 bed unit in one of the fastest growing property markets in the UK. In terms of rental income on a 60% mortgage, you're looking at sort of positive cash flow of around £4,000 a year on that asset after all of your costs have been covered. So that's your 1 bed unit. I'm conscious of time as well. To give you an idea on the 2 beds, you know, the payment terms are the same, but you'd be looking at a total equity requirement of about 148,000. So 148,000 would be your total equity requirement for a 2 bed spread over the next 2 years, the initial deposit, the balance on completion. And for a 1 bed, you're looking at 106,000. So the difference is about £40,000 between a 1 bed and a 2 bed based on a 60% mortgage. So hopefully that clarifies. Obviously, quite a lot of information to take in, and we produce detailed cash flows for every unit for clients on one-to-one consultations. Sorry, Scott, I think you had a question.
No, it was just obviously looking at in some of the things I've seen, you know, obviously it depends on which country you're coming from, but I mean, you know, I view the 60% is depending on, again, which country you're coming in from, but it can be, we have seen some positive aspects north of 60%. And what sort of interest rates are you seeing? Are you seeing a change coming out of COVID? Are the banks' appetite on the interest rates a little bit better, or are you still holding the line?
Still holding up, yeah. I mean, base rate's still historically low in the UK. LIBOR's low. Banks are being a bit greedy, if anything. And I think they'll probably have to cut their margins when interest rates do go up, because they're making quite a lot of money on mortgages at the moment. For international clients, typically I work off a base case scenario of 60% loan to value. We can get higher, up to 70, let's say, and then an interest rate of 4%. And again, that can be a bit lower, but it's really subject to individual circumstances. What do I mean by that? If a client has a UK footprint, if they have a British passport, if they've got an existing UK property, do they have a UK bank account, UK investments, is your spouse British? All of these factors contribute to building a stronger case for a lender, which could result in more favourable mortgage terms, i.e. a higher loan to value and maybe a more favourable interest rate. There are lots of considerations that the banks look at, obviously your age, your nationality, your income, asset base, and your affordability of taking on that the mortgage product. But again, that's a really specialist area. We haven't got time for that today, but hopefully that adds a bit of colour to sort of broadly how it works. But we would assist with that process for clients that did want to explore financing in a bit more detail.
Yeah, I think it's important to note that, obviously from our perspective, anyone that is interested, obviously to contact myself or their broker, and we'll jump on a call with George and take you through a very specific one-on-one with reference to your objectives and needs and how we can match the right product for you. So certainly give us a shout if you are interested in this one.
Yeah, definitely. And then just to show a few more images, really, how it all works. So this is block B here on the right-hand side. And you've got a really nice big internal courtyard, and then you've got the park here, Victoria Park, River Stour. There's a nice coffee shop down here. I had a coffee when I was there. Must have been 8 weeks ago I was last there. But yeah, nice coffee shop and just a really beautiful park. So having this on your doorstep, I think is fantastic for tenants and even for owner occupiers, anyone looking to buy for their own use.
Yeah.
And that's block B again there, different angle. That's looking from the courtyard, internal courtyard, looking back towards block B. And then just in terms of the finishings, the specification, work with King's Crescent Homes on a number of developments now, and they've prided themselves on delivering a top quality product, and this will be exactly the same. So very high end finish, and perfect again to facilitate home working from a connectivity perspective, but also a specification.
And George, just on that note, is from a furniture pack perspective, obviously there's furniture pack options if the clients want to take furniture packs or not. Is that correct?
Yeah, absolutely. We will facilitate that for clients that or we will advise, I suppose is probably a better way around. If we feel that it's going to increase the rentability and the rent of the property close to the point of completion, whether or not we feel a furniture pack is required within that unit. We wouldn't do it needlessly, but if the market is requiring it, then obviously you need to do that in order to attract tenants. So typically they cost anywhere from sort of £4,000, £5,000, £6,000 depending on what type of unit it is. But absolutely provide more information on that in due course should clients wish to explore that.
Thanks.
And then finally, we're back to the key points. So yeah, in summary, one bed's starting from sort of 210,000, two beds from 260, 60% financing, subject to individual status, and just a fantastic opportunity really for clients to invest in one of the fastest growing property markets in the UK, safeguard their assets, only outlay the initial 20% of equity, take a position in the market, and the balance to follow in a year and a half, 2 years time, and then on completion have a really solid investment that's going to deliver £4,000 or £5,000 positive rental income in GBP per year, plus some very steady capital growth over the next 5 to 10 years. And I'd be expecting sort of return on equity invested, that 40% component, to be 70, 80, 90%, depending on how well the market does over a 10-year hold, which I think in sterling terms is obviously very compelling for our clients based in the Africa region, who are undoubtedly concerned about currency fluctuations and devaluation of assets. So, yeah, Scott, I will pass back to you. I'm sure I've said far too much. Yeah, thank you very much for having me, and happy to take any questions, of course.
Yeah, so just in terms of, obviously there's one or two questions that have come up from some of the people on the call. With reference to the 3 blocks at the moment, we've obviously got A, B, and C. So A was launched initially. How far are we in terms of, is that sold out now or pretty close to it?
Yeah, so I mean the numbers are a bit back front actually. So D has sold out, and now we're focusing on B today, which is the new phase. We've already received a significant amount of interest. A number of transactions have happened. Because it's so well located within the development. So I would urge anyone who's interested to potentially explore this opportunity in a bit more detail to get in touch with their Carrick advisor.
Great. So thanks very much, George, and thanks for your time today. And just for the record, for those of you that have watched this and might want to review it, we will be sending out a recording of this webinar so that you can review it or touch base on any of the slides that you want to go back and look at. So please keep a look out of that. That should arrive in your inbox in the next 24 hours. And yes, again, as George alluded to, if you've got any questions for myself or my team or any of the advisors, please contact us as soon as possible. And thanks again for your time today. And thanks for joining us.
Thank you.
Bye-bye.